India is rapidly shifting towards renewable energy, and wind power is once again gaining momentum. But there is an interesting part. One company that almost went bankrupt a few years ago is now reporting record profits and strong growth. Is this a real turnaround story or just a temporary recovery? Hello everyone, I am Sebi George, and this is Decoding Equity, where the companies are analyzed through numbers and not by noise. Today, we are decoding Suzlon Energy, one of India's largest wind energy solution providers and a key player in the country's renewable transition. Suzlon operates in the wind energy sector where it designs, manufactures, installs, and maintains wind turbines. In recent years, Suzlon has shifted focus towards a higher margin service and execution led business rather than just manufacturing. Now, let us see how the numbers reflect this transformation. Quarterly revenue shows a strong acceleration trend. Sales increased from 1,458 crore in December 2022 to 4,236 crores in December 2025, nearly 3x growth in the 3 years. This clearly indicates that Suzlon is now in a high growth phase after its turnaround. But revenue alone is not enough. Profitability gives a clear picture. Profit before tax increased from 78 crores in December 22 to 567 crore in December 2025, indicating a strong operating recovery. This reflects better execution, margin expansion, and reduced financial stress. Along with profits, margin also provide important insight into efficiency. Operating profit margin has moved from 14.7% in December 22 to 17.4% in December 25, with a peak of 19.1 in mid financial year 25. This indicates strong operating leverage and better cost efficiency post turnaround. Now let us look at the balance sheet where the real transformation is visible. The company moved from a negative net worth in financial year 21 and 22 to a positive equity base of over 6,100 crore in financial year 25. At the same time, the debt reduced drastically from over 6,900 crores to just 323 crore. This shift from financial stress to stability forms the base of its recovery. Beyond financials, market participation also provides an important signal. FII holding increased from 6.7% to 13.2%, while DII holding moved from 3.2% to 8.1%. This accumulation indicates rising confidence among the institutional investors, supported by the improving fundamentals and better long-term visibility. At the same time, promoter holding has remained stable, indicating continued confidence from the promoters. However, the real test of this recovery lies in return ratios. Return ratios clearly reflect the improvement in Suzlon's financial performance. After years of negative net worth, ROE was not meaningful until financial year 2023. However, with the balance sheet repair, ROE has now improved significantly. ROCE has also shown a steady rise, indicating better capital efficiency and operational strengthening. Now, let us look at how the market is valuing this recovery. Over the last 1 year, the stock price has corrected while earnings have improved significantly. As a result, the PE multiple has been coming down steadily. This indicates that the earlier overvaluation is getting corrected. Looking ahead, the key question is what drives the future growth? Suzlon's future outlook appears supported by strong sector tailwinds and improving execution capability. India's renewable energy push is creating sustained demand for wind energy. In addition, its operation and maintenance business offers a stable and recurring income stream, supporting the margin stability. At the same time, it is important to understand the risk involved. The business remains dependent on project execution timelines. Margins can be affected by fluctuations in raw material cost and competitive pricing pressure. Regulatory change could impact the future growth visibility. Finally, let us consider what management itself is indicating. Management commentary from a recent con call reflects a strong focus on its execution, order book growth, and margin stability. The company has highlighted improving order inflows and a better clarity on project execution going forward. Before we conclude, a quick disclaimer. This video is meant purely for educational and analytical purpose based on publicly available information. It is not a buy or sell recommendation. Please do your own research or consult a qualified financial advisor before making any such investment decision. To conclude, Suzlon today presents a clear turnaround story supported by strong revenue growth, improving margins, and a significantly repaired balance sheet. Institutional participation is rising, return ratios are improving, and valuation is becoming more reasonable. Thank you for watching. This is CSMB Charts from Decoding Equity signing off.